Dear shareholders, as my second year as chairman of the board of a redefined Yes Bank, I thank you for your invaluable support to the bank's journey of transformation. Over the past year, the bank has successfully transformed into an organization motivated to deliver value to all its stakeholders. This extraordinary journey ran parallel to the unusual circumstances induced by COVID 19, which has left no portion of our shared existence unaffected. The bank's transformation has brought with it significant changes, bringing in clear responsibility and accountability at multiple levels across the organization. As promised, your bank has dealt with all legacy governance, compliance, and risk issues. It has further reinforced the foundation for sustainable growth. The organization has delivered a robust liabilities momentum with 55% growth in deposits over the previous year. This reflects very encouraging customer confidence across all segments. Over the last year, the bank focused on creating a more granular franchise with balanced earnings mix between wholesale and retail, monetize new businesses through digital innovation, while conforming to the highest standards of risk management, compliance, and governance. I'm delighted to share with you that in FY21, the bank recorded 9.06 billion UPI transactions, a record 102% growth over previous year. This has positioned the bank as a clear market leader in the banking industry. I feel proud of each and every Yes Banker who put in their best through these difficult times to help the bank cross key milestones. At this critical hour, with the Black Swan event of COVID 19 extending into 2021, I express my unreserved gratitude to essential service providers and other nameless heroes who are working tirelessly for collective well-being of this nation. Yes Bank has also steadily paved its way through this daunting situation. After a historic reconstruction scheme executed in March 2020 by the Reserve Bank of India and a consortium of investing banks, Yes Bank undertook a systemic overhaul. It put in place a more robust corporate governance model, building on three pillars of transparency, commitment, and accountability. I'm happy to report that over the past year, we have witnessed a strong resurgence in our operating performance. The operating profit for FY21 increased by 42% over previous year. We have strengthened the bank's position on our strategic priorities, which are capital, cost, liquidity, stressed assets, and governance. Yes Bank saw its credit profile improve further this year with rating upgrades from multiple institutions. The upgrade from Moody's and other domestic rating agencies following our very successful FPO of rupees 15,000 crores reflected the bank's improving business fundamentals in 2020 itself. On the asset quality front, our legacy stress book has shrunk, and the bank is well provided for a provision coverage ratio of 79%. The management prudently accelerated provisioning on incremental slippages in FY21 to prevent carrying it forward into FY 2022. On the back of this, the bank posted an overall loss for FY21 but maintained a profit run with sequential gains through the first 3 quarters of FY21. Importantly, capital ratios of the bank remain healthy, which will enable the bank to tap into growth opportunities in FY 2022. The bank's CRAR and CET1 ratios stand at 17.5% and 11.2% respectively, as against 8.5% and 6.3% last year. The Indian economy contracted sharply by 24% in the first quarter of the last fiscal when the lockdown was at its severest. Thereafter, signs of nascent recovery were visible as the economy returned to a positive growth in the third and fourth quarters. However, localized lockdowns during the second wave of the infections upset the momentum. This led the government and the RBI to extend some of the existing schemes, such as the ELCGS and the targeted long-term repo operations, to provide support to the businesses. RBI also showed its willingness to look through the higher inflation and retained its accommodative monetary policy at its last meeting. Advanced economic indicators now show that even as the intensity of the second wave was more significant than the first wave, the relative hit to the economy was shallow, and as the unlocking process was put in place, the bounce to the economy was faster. While there exists some uncertainty with respect to the third wave, its likelihood as also its intensity, however, forward-looking surveys of the RBI point towards some positivity with respect to the consumption as also investment behavior of the private sector. Income and spending expectations of consumers have stabilized and have shown a small uptick in the latest survey. On the other hand, Business Expectations Survey indicated that the next quarter is likely to be better, with order books building up and with inventories of finished goods dropping. These together probably show signs of demand returning to the economy, even as they may still be relatively lower than in the pre-pandemic days. Capital expenditure targets of the central government are also strong in FY 2022, and this is expected to unleash a positive multiplier effect on the economy. Even as the health crisis posed challenges for the economy, it has also created fresh opportunities for the banking sector. COVID-19 has enhanced the digital footprint in all areas of our lives: human interaction, e-commerce, education, and also remote working. Businesses are already adapting fast to the new normal, and technology-driven banking services are emerging at a rapid pace. The possibilities for the banking space seem vast and unlimited. And we at Yes Bank have also taken rapid steps to capture the opportunities that have been suddenly thrown open by the pandemic. At Yes Bank, we understand that we are at an inflection point so far as the economy is concerned, and we continue to closely monitor the macroeconomic space. I believe that our coordinated efforts, together with stakeholder support, will enable us to deliver our commitment to customers and communities. We recognize that even as there could be some tail risks, there are opportunities too, and as an organization, we remain nimble footed to capture these. The efforts in the past year has been to build granular retail business and MSME advance book with customer-centric product launches. The bank is future-ready for growth, enabled by product and service differentiation and a focus on quality customers, cross-sell, the right people skill sets, technology, and compliance. New customer acquisition was strong in H2 FY21, which is the second half of financial year 2021, with the bank opening 4,77,000 CASA accounts and lifetime best retail asset dispersals at rupees 15,000 crores. And we expect that this should continue in FY 2022. Even the SME business showed strong traction during second half of FY 2021 when dispersals were in excess of rupees 8,000 crores. Granularized growth of our retail franchise continues to be a core part of our growth strategy, driven by our pan-India branch network and leveraging our digital capabilities. The bank is focused on calibrated cash flow based growth in high quality retail and select MSME sectors, developing viable ecosystems in these growth sectors. In the corporate segment, our aim would be to expand in select asset light sectors with differentiated offerings. The bank is well placed to deal with technological disruptions to traditional banking business models by fintech players. Over the last 12 months, we have digitized our key asset and deposit journeys to build segmented and personalized digital first propositions. A major pillar of our retail strategy is to strengthen our customer service with greater empathy, care, as well as imbibing technology-led innovations to enhance our digital self-serve models. In the wholesale banking space, the focus would be on granular cash flow backed businesses to leverage digital or transaction backed relationships with fintech and e-commerce partners as well. As we fortify our digital distribution capabilities, transaction banking will develop digital distribution via partnership with fintech companies to reach out to new customers. Key pillars of the wholesale banking strategy would be around sector-specific lending opportunities. Yes Bank is also targeting selective presence in the infrastructure lending space such as roads, ports, renewables, and transmission, cement and metals, amongst others. Rural India will continue to be key in propelling the country's economic growth. The transformed Yes Bank fully recognizes its role and business opportunities in serving Bharat. The bank will place significant thrust on identifying emerging rural markets to increase value growth and drive profitability. It will further deepen its branch presence in rural regions and strategically partner with technology providers for co-origination and cross-sell of retail and SME assets, insurance, securities, and wealth offerings. The bank continues to integrate ESG considerations into its core business strategy by strengthening its frameworks for addressing environmental and social risks and impacts of its lending activity, operations, and supply chain. It is more closely aligned with global sustainable development goals and the Paris Climate Agreement. The bank measures its financed emissions, aligning its electricity sector exposure to the global 1.5 degrees decarbonization pathway. The bank also achieved a 5% reduction in the carbon emission intensity of its operations in FY 2021 as compared to the previous year. The bank will continue to make comprehensive voluntary disclosures on how it embeds sustainability into its operations and governance structures. Having embraced a dynamic business model adaptable to external realities, I am hopeful that our endeavors to better cater to our customers will enable value creation for all our stakeholders. Retaining our focus on fulfilling our fiduciary responsibilities to shareholders, employees, and the regulator, the bank is committed to improving the quality of governance and risk management practices. I believe that the way ahead lies in leveraging the learnings of the past to stay resilient and continue fulfilling the aspirations of our valued customers. Once again, I take this opportunity to thank our valued customers, regulators, investors, and our other stakeholders, with special mention of SBI and others who invested as part of the reconstruction scheme for standing with Yes Bank. I'm thankful to my board colleagues for helping establishing the highest standards of governance during a period of transformation. The bank would not be without the loyalty and commitment of over 21,000 Yes Bankers. The bank is indebted to their families who have also borne the brunt of the prevailing situation. I remain grateful for your unwavering support and faith in Yes Bank. I wish good health and prosperity for everyone. Thank you.